With the rise in interest rates, the biggest question on everyone's mind is housing prices. We're here today with Dean Sirianni from Barry Plant's Special Project Division, who has over 25 years' experience. Dean, where do you see the property prices going over the next few years?
Thanks, James. Well, we're in a sort of a very interesting situation or environment at the moment because we're in what we call an artificial environment. And what I mean by that is that the property market was moving quite nicely back in 2019, and we saw some, fairly stable, good growth. Then all of a sudden we had the coronavirus. What we saw happen then was that we had this little panic, and we had property prices drop, and they didn't drop; they dropped quite quickly, and we had the media giving us really bad, negative reporting on what may happen with property prices. Channel 7 News saying that some of the banks were forecasting for property prices to drop 20 to 30%. What actually happened was we had the market drop, and then, as supply and demand has it, we saw the market absolutely skyrocket and boom. And that went right through 2020 and 2021. Basically, what I say to people is this is actually an artificial market, an artificial growth, because we had all of this panic buying and we had all of this lockdown period here where people just were doing silly things, and it's never been seen before at all in my real estate time of 25 years. Then basically what's happened is about November, December 2021 was when we saw the market hit its peak. The market stabilised over January and February, and now what we're seeing is that property prices are coming down again. Now again, the media is saying that they are expecting another 20 to 30% adjustment in the property market. Wrong, just as they were wrong before. And the reason for that is that we have a huge supply demand issue here in Melbourne, where we still have a great demand for good quality properties. Hence, yes, property prices have come down about 5% already, and they will go down more, but they will get to a rock bottom where it's going to be more like if you had a constant of the market going up over those 3 years, it'll probably drop down below that constant and then settle, stay steady, and then come back up at some stage. Now, that'll take a couple of years, but I can't foresee that there's going to be a drop such as the media has been saying. We do have still a shortage of properties in Melbourne. We've got rental vacancy rates at 1%, and I only heard today on the news that the government is talking about it in their think tank, allowing another 200,000 skilled migrants into the country every year. My question is, where are they going to live? So, as the market is a push and pull effect, if you're going to be inputting at the bottom end there another 200,000 people looking for rental properties, that's going to stimulate the market again at the bottom end. So that's my interpretation of what the market's done. Where it's going, I don't expect it to be drops like the media's saying. Maybe in my world, maybe 10-15% adjustment from the top. And we're going to wipe off a lot of the gains that we saw, those artificial gains that we saw through an artificial market, which was the lockdown market. One thing about Melburnianites and Australians is that we love property. Once we see it get down to a certain level, people are going to buy. They're going to see great value, they're going to start buying again. Already, rental rates starting to go back up because there's a shortage of rental properties. So yields on rental are going up, which will start making property a good investment again for people who are looking for something safe. If there's anything that does happen, James, with the stock market in the next 1, 2, 3 years, with all of this global mischief that's going on, people usually go back to bricks and mortar. So again, the investors did leave the market at around this point, especially with their Airbnbs, because they couldn't rent them out, and also people who had properties that were leased to students, they couldn't rent them out. So a lot of the people disposed of their investment properties in this period. So we do have a shortage of investment properties. So I do foresee that when the market gets to a certain level, investors are going to come back in, get a better yield than what they could have got 5 years ago, and put their money back into bricks and mortar. James, that's what I think is going to happen shortly in the next couple of years in the property market. So again, bricks and mortar, safe place to invest your money.
If anyone does want to get in contact with Dean Sirianni, you can contact...
Or just look me up on the internet, Dean Sirianni at Barry Plant.